Welcome to the New to Crypto podcast, designed to guide you through the crypto landscape with pinpoint accuracy, created for the new and intermediate crypto investor. Join your host, Crypto Travels Michael, as he takes you through the different facets of getting started and succeeding in your crypto journey. New to Crypto podcast brings you new episodes daily, Monday through Friday, with surprise bonus episodes sometimes on the weekend. Let me ask you, are you new to crypto? Don't know where to start? Are you more experienced but have questions? Then you're in the right place. This podcast is designed for you. Coming at you from the Trading Center in the Lifestyle Design Studio, here's your host, Crypto Travels Michael.
Hey, welcome to today's podcast. I'm excited about today's show. I have a legend, somebody who's an original person that got into Bitcoin and crypto in 2010. And I'm really excited about this chat and this interview today. He's the founder of Vaultoro, which is where you can store your gold and silver bars securely in Switzerland. And he is also the founder of what's called The Standard, which we're going to talk all about today. And it basically involves receiving loans or leveraging off of your own assets. So please welcome Josh Scigala to the show. Josh, it's a pleasure to have you here.
Hey, thank you very much, Michael. It's an absolute pleasure to be on the show.
Hey, man, before we dive in, can you just share with our listeners around the world just a little bit about yourself?
Yeah, sure. So it was actually, I have always been really fascinated by alternative economies. And I started the world's first swap site where people would swap clothes and stuff instead of buying and selling, because I was interested in, building up alternative economies, especially after 9/11 happened. And I sort of deep dove that and realized, follow the money, and all sort of weird and sketchy. And I was like, hey, let's try to build an alternative economy, after you sort of find out about central banking and all that stuff. And so I did that. And after a while, I realized that swapping is just a terrible way of doing anything, because if I really love your shirt and you look through all my stuff and you go, I don't like anything this guy has, then that deal falls through when it's beautiful if I could then give you a token and you've got the rest of the marketplace to, of course, get something. And then I started thinking, okay, how can I build a token? But I don't want to be a central bank because I'm just reinventing the same old crap. And so I started looking, and I found what the cypherpunks were trying to do on their mailing list. And, it wasn't really there. Well, it wasn't there at all. And I just figured it's an unsolvable problem, the double spend problem. And so, but I kept my ear to the railway, so to speak, and sort of kept an eye on what people were doing in terms of digital currency. And in 2010, Satoshi's paper came across my desk, and I just loved it. I just thought, wow, she's done it. She's solved the problem, and so then I basically fell in love with the protocol, and have videos of me in 2011 telling people it's not a scam, it's not a tulip bubble, all of the stuff, which is actually the same thing we're still saying nowadays, less of sorts in a way, because people understand now what a rare number is and how it works. But so that's how I found Bitcoin. And and of course, in I think it was 2014, I lost a lot of money in the first Bitcoin exchange collapse, which was Mt. Gox. And so I thought, this was a string of hacks and stuff that was happening at the time. And I thought, man, we're sitting on a revolution of money and financing and global banking. And these idiots are raining on a parade so grand that they don't even understand that for a little bit of gain, So I set out with my brother and wanted to build actually a decentralized exchange. And the trouble was Ethereum didn't exist then, and the op return code, which is the programming language behind Bitcoin, really wasn't. It didn't have the ability to create what we wanted to create. So instead, we focused on transparency using the blockchain. And instead of dealing with fiat, because all the exchanges still now only deal with Bitcoin and fiat, or some do Bitcoin and crypto and other crypto and stuff, but generally it was just fiat, and there was no real stable coins back then. And that people were getting their bank accounts shut down all the time just for touching crypto, and so we wanted to basically say, hey, we got into Bitcoin to get away from banks, yet we're pricing everything in fiat. Let's build the first exchange that deals in allocated physical bullion, gold. So Bitcoin is now priced in grams of gold. And we launched that in 2015, and we're still going strong nowadays. It's called Vaultoro.com, Vaultoro.com. And yeah, it allows people to basically trade between when Bitcoin's high, they buy physical allocated gold sitting in Switzerland, high security vaulting facility, and fully insured and audited. And it's their gold. So if anything happens to us as an exchange, it doesn't matter because it's an allocated product. It's very, very different to a bank, which when you put money in a bank, it's not your money anymore. It's their money. And if they go broke, well, they're insured, maybe, depending on what country you're in. But they're only insured to, like in America, 250K, in Europe, 100K. So it's whereas gold can be insured to however much you've got because it's a physical good. And So we launched.
Wow.
Yeah, long story.
What, so many gold nuggets there, I mean, I did see that video of you on YouTube in 2011, talking about Bitcoin, and I can't imagine what that would have been like back then to talk, proclaim to the world about Bitcoin. And of course, we all know where it's come now.
Yeah.
And thanks for that intro about Vaultoro. Before we dive into, I actually have some more questions about, since you were one of the originals I have a lot more questions about that. But can you share for our listeners just a little bit about like the standard and what that is, since you touched on Vaultoro?
Yeah, sure. So, in 2019, I was asked to give a talk at LaBitConf, which is the Latin American Bitcoin conference. And on the way there, I read the white paper of Terra Luna, which had just launched. And I was sitting there thinking, this is just shocking. This is and this is, for those that don't know, Terra Luna isn't original. Like, there's been a lot of purely algorithmic stablecoins before then that were trying to solve this issue of not backing anything by any code, or just backing it by code, basically. And I got in and just thought, this is shocking. I'm going to have to talk about this. So I got up on stage along with Neville from Reserve, and we basically tore it apart in a panel and said, there's going to be a algorithmic stablecoin that's going to get absolutely massive and then absolutely just get destroyed, and everyone is going to lose their shirts. And then we're going to have the government stepping in with superhero costumes on, saying we need to regulate the space, and basically create new moats where the legacy banking system can say, look, we're so trustworthy, we should be doing this instead of, and because Terra Luna wasn't the first, there was, Waves, there was BitShares from Dan Larimer, there was a whole bunch of things that came along before it that also failed. So this wasn't the first. And so I came back from there thinking, I think we've got to start the ultimate stablecoin protocol that's fully backed by rare numbers and rare metals. And we took a lot of inspiration from MakerDAI, where you would lock up assets and borrow against them. And this works very similar to central banking, where they would give interest rates either up or down to stabilize the currency. So Maker has DAI, which is pegged to the USD. And if the DAI falls below the $1, then they'll lift interest rates basically on everybody that's borrowed DAI from themselves. I'm going a bit deep here, but nevertheless, it's a fully collateralized stablecoin, which has got more assets backing it than stablecoins floating around. So there's more Bitcoin, more Ethereum, actual physical gold, and some stuff like this backing it. And it's issued by people borrowing money from themselves. And we can dig a bit deeper into that later on. But really, it was about finding a solution that was truly transparent, but also scalable, while having an ability to have base money without interest as well, which was key. So I wanted to find a pegging mechanism that didn't have interest at the base level of money, which I find it's a little bit, it just doesn't sit right. And yeah, so that's why we created the standard. The standard, of course, comes from the gold standard. And it was one of those sort of ethoses, like, we don't need to wait for a government to create a new gold standard. For all those gold bugs or Bitcoiners that, like, we just don't need to beg the state for a gold standard. We can now have a voluntary one by locking up assets into a smart contract and then borrowing against those assets, and having the value of the borrowed assets really backed by what you've locked in the smart vault.
I love it. I love it. I actually have a background in precious metals industry, so yeah, we're speaking the same language right here. Josh, before we get into some more details with the standard, you had mentioned that like the Bitcoin white paper came across your desk in like 2010. Okay, it did not come across my desk. So can you give us a little more of that origin story, because I didn't hear about it for years later. But yeah, give us some more gold nuggets as to you got in the beginning.
Well, like in the beginning, it's very, very like original Bitcoin QT, which it was called, the software was called before it was called Bitcoin Core. It was very, very clunky and crappy, and you told anyone about it, they just didn't understand, because there wasn't this zeitgeist of general understanding at that stage. So you would tell anyone and they go, scam, because you're talking about fundamentally like money, fundamentally, and you're now saying it's created out of thin air. So, but it's not like created out of thin air like fiat. So gold bugs were like, nah, it's created out of thin air. And normal people were like, what? I'm fine with my money. There's no inflation. We had 2008, it's horrible and stuff, but they're regulating the banks now. And why would I trust some anonymous guy? And you got to remember, back then, the only use case was buying drugs on dark markets, and the media really grabbed onto that. It's that story because it's a hot headline, right? Like, wow, new like drug marketplaces and stuff like this. And then WikiLeaks got banned, and PayPal blocked them, and Visa blocked them, and basically they got annexed away, and the only way to get funds was to accept Bitcoin. And Satoshi Nakamoto at the time was like, no, don't do it. And we were like, nah, screw that. You can't, this is an open source thing. This is important. And so we just went ahead and did it. He thought, or she, or they thought it was basically too early, and it would, bring the eye of Soren onto this protocol. But so it was very, very difficult in those early days to basically convince anybody that this is a good thing. And so even if the white paper came across your table, it's very unlikely, unless you had a backstory of an interest in digital currency, that you would have even taken notice of it. Not you, maybe you would have, but the general people generally just sort of went, oh, weird.
It was originally like what, just developers, small community? Like, were you actively in like developer community or alternative money ideas at the time? Like, how did you get exposed to it in the beginning?
Yeah, it was basically through SwapStyle, which was this swapping platform. And like I mentioned, I just realized that swapping just wasn't doing it. There was a lot of deals falling through. And it was big, and there was this whole community. And I was thinking, if there was a credit system that I wasn't issuing, because I didn't want to, as the website owner, say, oh, now here I have 100,000 credits that float around, because now, like, how do I? Then I need to like figure out how many credits to mint, and then I get inflation, and then and at the time as well, it's we had like Liberty Reserve and other people trying to make their own money, and they basically would get taken to jail and get shut down because, money laundering was the big excuse. But actually, the state just doesn't like competition and private money. They don't like it. And that's why Satoshi was anonymous. He didn't want to take on the global central banking, the IMF, the governments, these are all big players, the oil industry even, because of the petrodollar, right? So it was a very different time to now. And because Bitcoin is, you just can't shut it down. They've just had to deal with it. And now people are more comfortable with saying, hey, I've now launched a coin, and it seems normal now. But it's a very, very different time. Yeah.
And you've got to see it evolve over all these years, from the beginning to, I mean, we're seeing major global brands now, talk about it. We're seeing it taught in Ivy League universities around the world. It's in supply chain. I mean, if it's not Bitcoin, it's definitely blockchain and crypto, and it's next gen, but you've got to see Web3, there's Web4 coming, by the way, and we'll share some of that next year with y'all. Yeah, some phenomenal things. So share with our listeners, you just touched on Vaultoro, right? Okay, so let's say I want to buy gold bars and store it, and you can offer that to me with Vaultoro. Right?
Yeah, that's right. So
okay.
The main problem we were solving there at the time was transparency. The exchanges just were not transparent. So we invented a transparency protocol called the Glassbooks protocol, and this was basically a way for anybody to audit us without us knowing that they're doing it. Peter Todd and Gregory Maxwell, who were some of the original cypherpunks, they did develop. Peter Todd's a crazy guy. By the way, he was like 14 when he was in the cypherpunks mailing list, trying to solve the double spend problem. We got some crazy peeps in this industry, crazy smart people. Anyway, so they built a transparency protocol called. I've forgotten what it's called, but basically it's very complex. It's easy actually for the user, because all it does is check what's called a Merkle tree, and it sort of hashes a whole bunch of stuff together and just gives you a green tick at the end. But for me, it wasn't really grandma friendly. You if you didn't understand what was going on, you didn't know how to verify it, you just saw a green tick and went, what does that mean? So I really wanted to build a system of transparency that you could. So what we did is we gave every user an anonymous ID that only they knew, and we knew as well, because we would issue it. And then we would tell the user, look, you can log out of the system, so we don't know that you're checking. And we publish on a public site every anonymous ID and how much gold and how much Bitcoin they've got. And then they can sum up. They can first check their ID if that's right. Like, oh yeah, that's how much gold I've got. And we don't know that they're checking, so we've got to keep it there. And then they can sum up all the gold, and then they can compare that to the gold vaulting facility paperwork, the insurance paperwork, the auditing paperwork, and make sure that that's all above board and equals out. And then on the Bitcoin side, you could check against the blockchain, right? You could add up everybody's Bitcoin holdings, check the public addresses, and see, that's how much Bitcoin there is. And so that's part of it. But the other part of it was that when Mt. Gox went down, which was the very first Bitcoin exchange, people lost a lot of fiat as well in that. And because of that whole thing where it's not your money anymore, you've put it in a bank, it's their money. And not only that, it's actually not even Mt. Gox's money, it's the bank's money. So either the bank could go broke, so there's a counterparty there, which we saw in 2008, or Mt. Gox could go broke. So you've got these two counterparty risks. And so we thought, why not just allow people to trade to physical gold that's in their name as their legal property, fully insured, fully audited, and then be able to sell that gold back to Bitcoin at any time using an order book. And that's really what we built. So it sort of allowed people to get out of the banking system, because that was kind of the goal of Bitcoin, but still have that beautiful rare metals and rare numbers working together. And this is why I never understood this whole Peter Schiff point of view of Bitcoin, it's terrible. And then even Barry Silbert saying that, drop gold, it's old. It's, this sort of war against Bitcoin and gold seems to me really superfluous, rather than saying we should work together and drop fiat. That's what we should be doing. And this is the old guard sort of libertarian anarcho-capitalist sort of philosophical stuff going on here. But really, that was the goal, and we sort of strayed away from that, and that's really what Vaultoro tried to solve.
Fantastic. So how does the standard work, and like how is it pegged to the euro or any other fiat currency for that matter? And then ultimately, how does it tie into what you have going at Vaultoro?
Yeah, sure. So what we wanted to do was we wanted to look at basically 4 different vantage points for the standard. The standard had to be provably over-collateralized in the fact that there's more value locked up than there is stablecoins floating around. So it couldn't go to zero like Terra Luna. And then the second one was we don't want interest pegging the system, and we don't want and we want to peg to as many fiat currencies as possible. So we don't just want to be USD based. And there's a couple of other things like cross-chain minting and stopping people getting liquidated and stuff like that, which I can go to as well. But they were the key ones. And so what we thought was, okay, we want basically what we'll start to do is we'll have like an initial bonding curve offering. Sounds like a complex name, but basically what it is it allows people to send Ethereum or Bitcoin or USDC and USDT and stuff like that into a smart contract, trustless, and the more people, and then say let's say they put $85 worth into the smart contract, they would get 100 euros worth out. So euro and dollar are kind of 1-to-1 at the moment. So it's like a discount curve offering. And what would happen, the more volume that went into this smart contract, the less that discount would become. So until it reaches a 1-to-1. So as more and more value comes into this pot, into this liquidity pool or this stability pool, it would basically finally reach a 1-to-1. So it would go from 80 cents to a euro to, because the euro is the first stablecoin we're launching, because there's so many USD ones, we thought let's focus on the euro. So you'd sell it at 80 cents, then as like maybe $1 million comes in from that, then you go to 79 cent, 81, 82, 83, and then eventually you get to 1-to-1. And at that stage, then we become a stablecoin. Before that, it's still the initial minting event. And so people have instantly like a 20% return on that, which is really good for them, and it's really great for us because we build this big liquidity pool. Because at the end of the day, what is a stablecoin? The only thing that really pegs a stablecoin is, can I get, if it's a euro stablecoin, can I get €1 worth of something else with it? Can I get €1 worth of Ethereum or gold or whatever, or a euro? Can I swap it 1-to-1?
Sure.
Everything else is sort of doesn't really matter. It's just a means to an end, to that end. And so really that was kind of the first initial way we're minting. It's kind of the initial phase. And then the second phase to that is, okay, there's ways for people, there's yield farming opportunities after that help us, because as you probably noticed, in that moment, we're still under collateralized because it was sold at a discount, right? So there's a second phase where people can add liquidity to the pool and get a really nice yield. So that attracts the yield farmers. That'll very quickly get us over collateralized. But this is sort of the first phase, and then we'll be launching what we're calling private smart vaults. So these smart vaults, what it'll allow you to do is, I had the problem that I needed to move into a new apartment, and I had to put up I was renting it, so I had to put up some deposit. So I had to sell like 80 Bitcoin or something at the time, right? Just for the deposit for a rental, it was very painful. And instead, what I could do with the standard is actually take that Bitcoin, put it into a smart contract that I control the keys to. I'm not sending it to Celsius or to Vaultoro or to an exchange. I'm sending it to a smart contract, and then I lock it. Now, let's say I have 2,000 euros worth of value locked in that smart contract. Then I can borrow up to 85% of that. So I can, let's say I borrow 50% of that. So I put 2,000 in and I borrow 1,000 euros that's minted. And basically that Bitcoin or Ethereum, that wrapped Bitcoin or Ethereum sits in that smart contract. And now I've got, if there's 2,000 locked up and there's 1,000 floating around. And so now that's how more S-Euro comes into circulation. But it's not pegged through an interest rate. You borrowed that from yourself. So you've now got value. And how do you get that value out that you've locked up? Well, you have to just send that S-Euro back into the smart contract. It gets burned and it unlocks the value that's inside. And so this mechanism is really beautiful because it allows people to borrow money from themselves. They don't even need to go to a bank anymore. They can borrow liquidity from themselves without selling the asset. Plus, you're not smacked with capital gains tax because you haven't sold anything. You've borrowed money. And not only that, you can unlock liquidity for people that are finding it hard to save. A lot of people find it hard to save because they have to, buy food and rent and everything else, and they don't have enough left over to really put into savings. But imagine if you could put it into savings, borrow from yourself, and hey, if you get liquidated, you had to sell it anyway if you didn't have that option. So it's a really nice way for people to break that poverty cycle as well, where you're sort of living not from paycheck to paycheck, and you don't really have enough resources to sort of save, which is a really important part. And the other beautiful thing about this mechanism is inflation works for you. And many people say, how do the wealthy protect themselves in inflationary cycles? Well, what they do is they borrow the hell out of it. But very wealthy people can make really good deals with banks, right? They go in and they talk to the bank and they say, I want a fixed interest rate that isn't going to get revalued if we go into a hyperinflationary cycle. And the bank's like, we don't usually do that. Well, I'm not going to borrow this if I'm not going to put it.
They'll go to another bank. So the bank wants their business.
Yeah, they want your business. So they'll write that. But the normal person can't really say, demand this sort of thing. And so rather, imagine if you could lock up assets into a smart contract and then borrow money from yourself. And let's say you borrow, 10,000 from yourself now, and then in 5 years' time, that 10,000 is worth like the price of a carton of milk. Then you've effectively paid off your loan with the price of a carton of milk. And so this is really what's happened in the past is that the wealthy would take out huge mortgages at fixed interest that couldn't get revalued, buy property by real value, like rare property, forestry, gold, whatever they could get their hands on, and then let inflation pay that off for them.
Mm-hmm.
So, yeah.
Interesting. Thanks for unpacking that with all of our listeners. So let's go. I'm following you as you're unpacking this. Yeah. You have like the standard token, right? The TST token.
Yeah.
So walk us through, like, let's say, the process. Let's say you have your own assets. Yeah. Let's say we have a gold bar, for example, and then break down how the standard token like operates, and because I assume we would receive the TST token in exchange for when we lock up the assets in the smart contract. Is that right?
No. So what you don't really, because you have total control of that smart contract. You okay. Have the private key. You can unlock it at any time. It's just the private vault needs to be paid back. So if you've imagine a vault like a little safe, and on the side there's a bill dispenser. You can lock up the money inside, lock the safe, and the bill dispenser would give you half the value that's in there. But it would only unlock the safe if you put those bills back in to the dispenser. Okay. Then it would unlock the value. What the TST does, the TST is a membership token / governance token, but it also allows people to earn staking rewards. So there's no interest in the system. So people that have a large mortgage, I've heard people say, "Oh, I'm gonna basically lock up Bitcoin, borrow from myself, pay off my mortgage, and now my mortgage is at 0% rather than these large things." But to do that, there's a minting fee. So there's a small minting fee on that when you mint the S euro. And all those minting fees, and S euro is the first one. There'll be Great British Pound, there'll be USD, there'll be Indian Rupee, Ruble,
and
all of them.
This is what someone receives when they receive the loan off of their asset that's locked.
So they can buy TST off the free market. It's a free floating governance token / membership token. What they can do?
No, I mean like the Euro stablecoin.
Yeah,
is that
exactly
what they receive when they get 50% of the value of their asset locked?
That's right. The first one we're launching with is S euro, but they can. The next thing what we be doing is launching SUSD, Indian Rupee, and the rest of them, especially high inflationary places like Turkey. The lira would be a wonderful stablecoin to release because the inflation would pay off these debts that people have themselves. But so what you do then is people they buy some TST, they stake it, and every loan that gets created around the world, imagine if you could get a cut from every single loan generated around the world. And that's pretty much what TST allows people, is that they lock up assets, they can vote on the direction of the protocol, but they can also get rewarded for doing some of that work in all of the income that's generated. They have to do some work for it, but it's very minimal, and it's just a way of allowing a decentralized mechanism of the steering of this ship, because really what we want to build at its core is a decentralized mechanism that is steered by these holders, these TST holders. They get paid for making great decisions on the direction of this stablecoin protocol.
Okay. And to just finish completing the transaction for our listeners, so let's say we lock an asset, in the smart contract, we receive S euro, for example. So can we swap the S euro? Like, how can our listeners turn that and access it into like cash?
Yeah,
right.
So initially,
because I just had a friend, he just bought an SUV with his, unfortunately, his Bitcoin. He could have used this,
Yeah, absolutely. I bought a Tesla with the same mechanism with Maker. I had locked it up and I borrowed against it, and I bought the car, so I didn't have to sell it. But back in the day, I did have to, because the thing is, I just don't. The direction a lot of places going, like Celsius, people did this, but Celsius was a centralized entity that, of course, speculated with people's assets and did all this jiggery pokery. It was basically Wall Street meets degen. DeFi. It was a bad mix, right? So what you want to do is lock up assets into a thing that can't be touched by anybody, can't be speculated with, nothing. Yeah, it's not going to get value at yield, but it's going to hold its value and hopefully go up. But sorry, just to go back to your question. Yeah.
So how do we swap the S euro into what most people would just call cash, right?
So they'll be,
how can they go buy that car or pay the kids tuition?
Yep. So Vaultoro will be the first exchange to offer S euro to euro swaps.
Okay.
But they're also we're talking to other major exchanges as well. There'll be DEXs as well, so you can exchange that S euro to then Ethereum, and then go to an exchange to Coinbase and swap your Ethereum to cash. All this stuff will happen. Yeah. Of course, it just takes a little bit of time to set that up, but there's also yield farming opportunities. So
I like that.
Yeah, in the initial phase, like people are paying still like negative interest rates here in Europe. It's starting to change now because the inflation, people are like, governments are trying to slow down inflation by lifting interest rates, which is actually very, very typical thing to do. And it basically makes it worse because people start losing their jobs and the economy it's really on a down.
Slows down. It does the opposite,
Yeah. But, I mean, they should have done this a long time ago. They should have lifted interest rates 6, 7, 8 years ago. But instead, they were just hungry on crack, wanting more and more. But nevertheless,
Thankfully, you created a solution for our listeners.
You
This is a way that they can borrow from themselves, and it's protected.
Yeah, I mean, I can't take all the credit. I have a team of extremely smart and wonderful people around me, all working tirelessly. I'm just another cog in the machine. But yeah, it's wonderful that this exists, because imagine being able to then put that S-Euro to work in real time. So in our initial minting mechanism event, what we're doing. So stage one, I explained before, where people put the Ethereum or Bitcoin into this pool to build up this stability pool, and then now they're holding all this S-Euro. And what do you do with it? Because it's fresh. There's not much going on. We've made partnerships with a whole bunch of different projects where you can use it, but really what you want to do is earn more on that. So we've give people the option to take the S-Euro, take some more USDT, and put that into a liquidity pool on Uniswap and sell that to us for a swap of a bond. And we buy that liquidity off of them for a higher yield, like quite a good yield. And so they can, so that's stage two. So they've got something to do, plus it earns them even more. And they can choose that maturity date on that. And we're sort of making it very very rewarding the longer the maturity date is of this bond. But that's to make sure that people don't just dump TST because they get paid in TST for that. So yeah, I mean, it's all very complex. You can go over to the standard.io to read more details, or join the community. Actually, that's probably better, because you really ask lots of questions there.
So how okay, let's say I lock up my assets, right? I receive the S-Euro. Okay. How am I protected against, say, being liquidated?
Yeah.
Because I know, like, a lot of traders listen to our show, like they're going to be thinking the same, because you actually got me thinking in a lot of different options and what I might want to do personally. So this is good, going down this rabbit hole.
Yeah, cool. Yeah, and we've seen massive liquidations in this bear market happen, and something like Maker is very intransparent. It's pretty centralized. It's very cliquey who can buy these liquidated assets. And so we wanted to really, first of all, open that up. So there's two ways. People can stake TST, and if someone does get liquidated, they're there to buy those liquidated assets under market value, under 15%, because you borrow up to 80%, right? So you have to be over-collateralized. So that difference allows you to buy those liquidated assets under market value. So that's a really strong incentive for TST stakers to stake that there. And what happens when they buy that, they get those assets that are locked in that smart vault, and they burn the S-Euro so that make sure there's always less S-Euro floating around than there is locked up assets. But on the borrower's side, of course, you don't want to get liquidated. And we want to try and do as much as possible to stop liquidation. So can
you add more assets so you don't get liquidated?
Yeah, absolutely. Okay. So you can add more assets. You can pay back the loan. Another thing you can do, if you can't afford to pay back your loan, what we're doing a lot of R&D on is to be able to sell that. It's basically a collateralized debt position, right? It's a CDP. So to sell that smart contract as an NFT, as a non-fungible token, to someone else, and then they can unlock that by paying it off the loan. So you say, like, oh man, I've just lost my job and I can't pay off the debt that I took out on myself. But I don't want to get liquidated. I'm going to sell it to someone else as an NFT. That's one thing you can do, so you can at least get some money back. And the second option is that there'll be a switch for automatic collateral trade within the smart contract. So to a tokenized gold, because there's no point trading over to Bitcoin, to Ethereum or something like that, because when the market really starts shitting itself, it doesn't matter what crypto asset you're in. Even gold kind of follows it a little bit, but at least it's on a slightly separate train track. It's not absolutely following the market, and it definitely doesn't collapse as hard. So what you can do is you basically set a switch to say, okay, this is my threshold. When it hits this threshold, automatically trade to a tokenized gold the assets that are locked up. And so it sort of helps you. Of course, if gold goes down, there is still that liquidation process, but that's
Okay.
they're the options that you have. Yeah.
And let me ask you, like I have my asset locked in the smart contract. I received the S euro. Is the loan timed? Am I servicing the debt? Can I pay it back anytime? Like, is it a specific amount of time? Like, how does that work?
No, it's timeless. You can have it for as long as you want. There's no time and there's no interest. You just have to pay it back to get the collateral out, which is valued more than you borrowed.
Okay. Yeah. So you just when you borrow, you just pay it all back, and then you receive your asset, and you can come back and do that whenever.
Yep. Exactly.
Nice. Yeah, this is awesome. So share with our listeners like the things to come for like the rest of this year and into 2023 with you and your team.
Yeah, I mean, we're just heads down working. Bear markets are a very terrible place for a lot of people. But for people like us building, we were quite clever with what we did with the initial funds that we raised to start this project. We hedged a lot in gold, and we're not gamblers. We've run Vaultoro and the smell of an oily rag since 2015. We're quite conservative with that. So we've just been head down building, and really that's what these bear markets are about: flushing out all the crap projects and letting the strong projects build. And so that's really what we've been doing. What's happening now over the next few weeks is that we are releasing kind of a wait list, which by the time this broadcast comes out, that'll be live. So you can go onto the standard.io and basically put in your email, and then we're giving a whole bunch of like little airdrops plus rewards and stuff because we've kind of been in under the radar, just building. And so this will really help us to get the word out there. So people get points for the more they share. And if they get other people to sign up through their referral link, then they get more points, and they'll go up a leaderboard. And the top 1,000 people in that leaderboard at the end get like 1,000 euro worth of TST. And the people in the top 250 position get 2,000, and the top 100 people in the top 100 get 4,000 euros worth of TST, as well as I think the top one also get a gram of tokenized gold. So there's a lot of it's all up like 1.45 million euros worth of rewards and things up for grabs. So
nice.
Yeah. I think it'll get people really excited, and it's time for us to sort of show what we've been building. So we thought, let's do it. let's do it.
Fantastic. We'll definitely have all the links, on our episode blog post page for today's episode, of all the things you're talking about. So thanks. Josh, how can our listeners reach out with you and your team, join the community, stay in the conversation, be part of what you're doing?
Yeah, I mean, you can definitely follow me on Twitter. It's Scigala, which is JSCIGALA. But you can, the easiest way is just to jump on thestandard.io and follow the links there. There's jump into the Discord. We've got a Discord channel. We've got a Telegram, all the usual stuff. We've got a great YouTube channel. Subscribe to that because that's where we put updates. Definitely join the Discord because we're starting to. We've just launched D-Work, which is really fantastic. Like this is for me, outside of Bitcoin, the whole DAO space is probably the most exciting thing to happen to sort of anarchic philosophy since Bitcoin, really, because it allows thousands, if not millions, of people to all collaborate together, have a stake in the project that's being built, but also sort of have a nice egalitarian way of building and working. And D-Work allows for that, people voting on different structures, but also maybe you write articles. We pay people for articles or memes or all sorts of stuff. So and people can say, hey, I want to do this. I'm really good at that. And they put a proposal up and people talk about it and say, yeah, that's cool. So there's lots of stuff happening. So definitely head over to the Discord.
Okay, awesome. And Josh, is there anything else you want to share with our listeners around the world?
I just want people to remember it's not, what we're building here really, not just with the standard, but with cryptocurrency itself. We have the ability right now to basically head towards an absolute dystopia with these CBDCs. They're already talking about basically having a CBDC where it's got a time, like if you don't spend it by a certain time, then it loses its value. Or, hey, there's a lockdown, you can only spend your CBDC here, but not in the next province across or town across. It's total bondage. And what you really want to make sure is that right now, we as the people of the world, the plebs, have the ability right now to build something from the ground up. And just like Buckminster Fuller said, there's no point arguing and demoing against the power structures. There's no point fighting the power structures. You just build something better and leave the old to be obsolete. And that's how we win. Well said.
Well said, Josh. It was a pleasure to have you on the show today, and you're welcome back anytime. And, thanks for coming out from Berlin, Germany. Yeah. It was a pleasure. So thank you.
Thank you very much, Michael. Fantastic. Really enjoyed it.
Absolutely. Absolutely. Hey, if you like today's podcast, definitely like and subscribe to the podcast and show your support, and chime in here tomorrow for another special episode. Until then, make it a great day.
Thanks for tuning in to New to Crypto Podcast. If you like the episode, be sure to follow and subscribe. You can listen to every episode on all major platforms. Have an interest in being on the show or want advertising? Reach out at newtocrypto.io. Head over to our site, newtocrypto.io, to access the resources mentioned in each episode. Until next time, remember to navigate the crypto landscape with pinpoint accuracy.